Joining me now to discuss, Ashley MacNeill, Vista Equity Partners, head of equity capital markets. Welcome back.
Thank you.
It's such a good time to have you because there are so many different opinions about this whole AI bubble or not. You say that you remain, quote, responsibly bullish on the market. So what does that mean? Like friends don't let friends buy AI stocks at these levels? Like, what is that?
Yeah, no, it means being measured about your approach, recognizing that, yeah, we're probably in a bubble. We've had multiple people talk about it, even on your show, about being in a bubble, but that is okay. And that looking and recognizing the tailwinds that are at the market right now. So think about, Fed cutting, you see retail inflows, you see AI innovation, and we're about to enter into an earnings cycle, which is by all accounts going to be relatively strong, particularly if we're using the last earnings cycle as a barometer.
All right, so maybe the market's quacking a bit, but his point is an interesting one in that even if you believe that this is a bubble, and even if you believe that it's going to end badly, you don't want to miss out on, and it feels like you're kind of saying almost the same thing, you don't want to miss out on what could be this tremendously powerful blow off top, for lack of a better way to describe it.
I think you have to kind of frame it, though, what kind of bubble are we actually in? We've heard a lot of descriptors, industrial bubble, baby
Bezos
bubble.
said that, right? Industrial bubble.
CapEx bubble. Is this a bubble that's going to burst like it did in 1999? Or is this more like a balloon where we're going to see it inflate and deflate as we kind of go through the cycles? Given the longevity of this technology and given the fact that this is waves that is going to adopt this technology, I'm more inclined to think that we aren't bursting, but rather we're going to inflate and deflate as this technology ebbs and flows.
You think valuations are in a bubble?
I think we have seen valuations pull forward and growth expectations pull forward for well over a year. I don't think this is a unique situation that we're in. And I think that that's really been met by very strong growth by the Mag 7. Mag 7's been growing 27% quarter over quarter. The market 9%, GDP 4%. So yeah, we might be in a bubble and we might have pull forward valuation. But in my mind, that's a means to an end to justify the CapEx spend required to make this transition from the AI enablers into the AI adopters.
So as long as the CapEx levels remain robust and you don't have somebody come out and say, you know what, I'm suddenly worried about where all this money is going, are we good? Is that the most definitive sign that things in this marketplace are okay as long as the CapEx keeps flowing?
I think if you look historically at prior bubbles, where things have kind of gone awry is when the supply has outstripped the demand. And from all intents and purposes, what I can see from all the metrics we've seen is that the demand is not being outstripped by supply at any time soon. And in fact, there is going to be a lot of longevity to the demand for this technology, given how ubiquitous it will be in our lives.
What about if the demand, which is obviously there, is circular in nature, which is being discussed, and I know you've probably been thinking about as you've been looking at these deals that are being made like everybody else is. I like the way that NBC News put it. NVIDIA plans to invest in OpenAI, which is buying cloud computing from Oracle, which is buying chips from NVIDIA, which has a stake in CoreWeave, which is providing AI infrastructure to OpenAI. Are you concerned about that at all?
Well, maybe it's my background, but this reminds me a lot of the commodity supercycle, in the sense that in the early 2000s, in order to meet the demand and to provide supply of these commodities, it had to involve intensive CapEx and partnerships. And this is about demonstrating that this technology requires a huge amount of CapEx, but it involves a multi-year strategy and partnerships. And so does it concern me? No. Do I think we have prior examples of this, of bringing this technology on? Yes. And so I think you can look at other cycles and draw some parallels.
When you look at the overall market, we're about to have earnings season. Do we come out of earnings season before, we haven't even gotten into it, but do we come out of it saying, you know what, this is the place to be, and the numbers that were just reported, as you said, how powerful they are relative to almost everything else, right? Some make the argument that these tech stocks and the investment in AI is the whole economy right now. I mean, do we come out of earnings season wanting to lean in as much as we have in the past to these kinds of stocks, the hyperscalers, or do we have a bigger broadening out in the market? What do you think?
My personal opinion is you're going to see a broadening out, and you've already started seeing that in earnest. You've seen other parts of the economy, utilities, energy, infrastructure, industrial start to benefit. And if you look at earnings and growth estimates, tech by far and away is the winner, but utilities, energy, industrials, they're all supposed to grow double digits, which is pretty unique. So I think you start seeing a broadening out and more breadth to this rally.
There's almost like a circular nature in and of itself in those kinds of stocks. Like, yes, utilities have worked but they're tied into the whole AI story, as are some of the industrial names as well, right?
It's the AI supercycle. This is what has to keep this technology going to move from the enablers to the adopters.
I enjoyed that. Ashley, thank you.
Thank you.
Ashley MacNeill, Vista Equity Partners, back with us on Closing Bell.